Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hi there and welcome to Better System Trader. This is episode number 142. Glad you could join us for this one. The idea for this podcast episode has its roots in a trip I made to the States last year. I was at a conference and one of the speakers was a guy named Ricardo who was 1993 karate world champion. Ricardo was explaining how he came about becoming world karate champion, and he shared his number one secret to achieving this success. Any ideas what it was? Well, it was something that sounds incredibly boring, but it produces incredible results. And that is mastering the fundamentals. Now, Ricardo explained that leading up to the World Championships, he spent months and months just practicing the core fundamental moves. He wasn't practicing all those complicated, fancy-looking moves you see in the Hollywood movies. No, he spent weeks just practicing a punch until he became so great at it that nobody else could beat him. And I think this mastering the fundamentals approach has strong applications to trading as well. Many traders, especially when starting out, think that the latest software or the fanciest indicator is going to guarantee their success. But over time, I think we realize that there are some core fundamentals to trading which really bring the results. And perhaps from time to time, we even forget about them. So today we're going to discuss some fundamentals of trading with our guest, Martin Lembak. Martin is in a very interesting position because he has access to hundreds of different trading strategies being traded live in the market. So he's in a very exclusive position to see what works and what doesn't. Now, in our chat with Martin today, you're going to hear a number of topics. We'll cover quite a few, including why it's important to understand the characteristics of a market before trying to create or match strategies to that market, and how to choose the types of strategies that suit the personality of the market and the types of trading styles that are the most popular and profitable in the markets right now. We're also going to talk about some commonalities between developers of successful trading strategies and what traders can do to accelerate their progress. We'll also be going through the fundamentals of portfolio construction, including some challenges and false assumptions with creating portfolios. And then we'll also discuss broker selection and some warning signs when assessing whether a broker is safe to use. And we're going to talk about much, much more. So let's get started with my chat with Martin. G'day, Martin. Thanks for joining us today. It's great to have you here as a guest on the show.
Thank you for having me.
Well, if we can just get started with a little bit of background on yourself. Do you want to share with us how you got started in the markets?
Yeah, I started in business in 2001, working for a commodities brokerage firm in Europe. And before that, I graduated from the university, majored in economics, and started trading stocks in 2000. And I learned my lesson because, of course, like many others, I was buying technology stocks at the time and prices tanked and I got burned. Still, this field attracted me a lot, and after finishing military service, I was looking for a job and found one in the futures industry. And I learned a lot working with Bloomberg Terminal, doing commodities work, mostly related to US futures markets, but also European and Japanese ones. And those days, there were no systems involved, just pure technical analysis combined with fundamental research. And I was on the phone with a major clearing firm in London during regular hours. And if something came up after hours, I would call Jack Carl's futures firm in Chicago. And this was always very exciting. And I was thinking to myself, these guys on the other side of the pond are so lucky to work in the futures capital of the world. And since the beginning, I knew I'm going to need some kind of internship to learn more. So I arranged one via agency in Prague, but I had to find the employer, and I guess I was lucky since at the time there were it wasn't commodities firm, but securities firm. Starting, it was Options Express in Chicago, and its president, David Colt, offered me a position for 1 year. So I was working on a trading desk, helping clients, taking their orders, and so on. I got my Series 7 as principal license. According to my plan, I was hoping to finish my internship and go back to my homeland, and I did so, actually. But I remember before my plane to Europe took off, it was delayed. I was standing outside of international terminal in Chicago, looking at the Chicago skyline and telling myself, heck, what am I doing? Maybe the best would be to stay here. Yeah. Anyways, eventually I flew back, but about a week after arriving in Prague, I started the process all over again. And this time I got offer from the Commodities Trading Systems brokerage firm in the Board of Trade in Chicago, and its president, William Galvas, and this is how it started with trading systems. It was in 2003. So this is basically how I started.
Okay, so if we fast forward to today, what are you doing now?
Yeah, even after all these years, I still love very much what I do in this field, and working for a brokerage firm that trades several hundred trading systems and portfolios designed by third-party trading system developers from all around the world. And we record actual trading numbers. We publish results daily. What I do, I try to analyze these results and try to come up with the portfolios when combining these different strategies. That means putting together no or low correlated strategies into the baskets with different logics, time frames, markets, and trying to possibly even more enhance risk-adjusted returns and smooth equity curves of these portfolio strategies. And also, me and my brother also manage our own proprietary funds with our CTA, systematic global macro, no equity long bias trend strategy. Plus, we also started short-term day and swing multi-market program in cooperation with other managers.
Yeah.
So we've got a handful of different work in place here.
I think you're in quite an enviable position in that you get to see hundreds of different strategies and you get to see what works and what doesn't. So you must have picked up some really interesting insights from that, which is what we're going to discuss today. So I thought maybe today we'll just talk a little bit about fundamentals, but I think we'll just focus on a couple of key areas that I know people are interested in, because I receive emails from listeners and traders who want to know about these type of things. So I thought maybe today we'll cover 3 or 4 different aspects. Now, I think as well, fundamentals are extremely important. We shared on a blog post on Better Trader Academy, I think it was this week, the story of someone called Ricardo, who was a karate world champion. And we got to see him last year. He was presenting at a talk, and one of the things that he said was the key to his success was that he practiced fundamentals a lot, and he would often spend weeks at a time just practicing a basic punch. So I think there's a lot that traders can learn from that as well. Is sometimes the fundamentals aren't very sexy or very cool, but they can really make a difference. So how about we start a little bit talking about trading styles?
Okay.
How important is it to choose the right type of trading style to suit you?
Yeah, it very much relates to personal preferences and timing of right period. When in one period intraday systems are working relatively better than swing or trend, let's say, and in different times, the opposite is true. Also, some might prefer positive skew strategies, such as divergent trend breakout strategies, and others might enjoy negative skew mean reversion systems, that have maybe more profitable trades. But also there is this danger that there is this black swan somewhere waiting.
Yep.
So you cannot say which one is better. There are different times when different strategies are working, and it really depends what's your personality and which kind of systems fits you well.
Yeah. That last statement you said there about choosing a trading style, what are some of the considerations there that you could take into account, and how does that apply to the different types of trading styles?
Yes, definitely. This consideration has to be based on the research. What I see mostly, it's research of time series itself. With respect to different markets and time frames. So when we do statistical econometric tests, such as autoregressive functions, autocorrelations, ADF, Hurst exponent variance ratio half-life, or Johansson cointegration test for spreads, then we have some kind of knowledge what kind of time series it is. If it's mean reverting or trending and stuff like that, then we can create a strategy and backtest specific strategy that is in line with the statistical properties of particular time series and time frame. So these are, I think, the most important considerations. Doing tests basically and trying to come up with a strategy that is in line with the market. We can apply. Let's say we find out that on a daily bars on the index, it's been reverting many times. So very popular right now are, for example, mean reverting swing index, currency or commodities, mean reverting strategies. So this is mostly swing, running on 60-minute bars or daily bars, let's say. But also, we can find some very nice trends intraday. So stock index intraday and energy breakout intraday strategies are quite popular also right now. But somebody might be looking for some longer term trends, like holding positions for weeks, months. Then multi-commodity trend following still has its appeal, especially how it performs during the crises periods, because of this, taking advantage of divergencies in the market when there is some crises, and there are some nice trends really in the markets. So there are different styles, different markets, different time frames, basically.
Yeah. So do you think that you said there that mean reversion is quite popular at the moment? Do you see that switches as the market changes, or are there other factors that kind of come into play?
Yeah, it's right now that are very popular. Before that, like 10 years ago, there were intraday systems popular. Like 90% of the time was intraday trading. There were a couple of swing trading, but it was mostly intraday. And situation changed a little bit. Right now, swing trading is more popular. Who knows? In maybe another 5 or 10 years, we'll see a switch again. But right now, swing trading, I can say that, are most popular and most profitable.
Yeah. Okay, so you mentioned quite a few aspects there when considering a trading style that suits a market. What do you think is, do you have a number one tip for people when they're looking at different trading styles?
Yeah, well, personally, one tip, I would say I'm rooting for the diversification in trading styles and markets. And still, I understand everybody's got different personality, and I would say try to match your own to particular trading style that fits you best. And whenever you're trading something that fits you best, and you can find a profitable strategy, then that's perfect. It doesn't have to be swing or day. It can be trend, for example, if it fits you well and still can make money. You can always find the methodology that makes money.
All right, well, let's move on now to strategy developers, because you're in touch with a lot of strategy developers, and you also get to see the actual results of their trading, good or bad. So have you seen any particular commonalities between the developers who create the best strategies? Is there any kind of trend between those types of traders?
Yeah, in general, I would say long trading experience and passion for the markets. are important. Also, great analytical and programming skills and ability to work well with executing broker. So these are the most important, I think. It's basically a long run endeavor, so you have to have passion for that.
Oh yeah, obviously, yeah.
It's not going to happen the next day. Yep.
Yeah. Okay, so what about developers of the worst strategies? Is there anything in any common patterns you see amongst those types of traders?
Yes, mostly they are the ones who put too much emphasis on pure in-sample backtests and for the most part ignore other preliminary or post-release tests. So, if you just do some simple backtest like many platforms are offering, then that's not enough. You have to really do some more thorough analysis and for the strategy to be successful. So if somebody just finds something by curve fitting the strategy and over optimizing it, and hoping that it's gonna perform well, that in most cases it might not be the case here. You have to really work on it a little more.
Yeah, I guess that's probably an indication. The first point you made there about the developers with the best strategies have been in the markets for a while, so you kind of realize. I think probably as system developers, we've all probably done the whole curve fitting thing when we started. I know I did, and highly optimized things, and it doesn't work. And I think over time you kind of work that out and find better ways. So
right.
for strategy developers, what can they do to move themselves from more over to the successful side, other than hanging around in the markets for 10 or 20 years? Is there anything that they can do to kind of accelerate their progress and help them along the way?
Yeah, right. I would say do not give up. It all comes with experience and passion to observe and learn, and do the testing and try to learn from other traders, like this podcast here and different courses, for example, by practitioners, so it can really speed up your process. But don't give up. It all comes with experience.
Yeah, that's a good tip. I think you're right. There is a lot of information out there, podcasts and websites and all kinds of things. I guess the challenge there is knowing who to listen to, because there's a lot of crap out there as well. So
that's true. That's correct.
Are there any kind of tips you can give for people trying to determine if they're worthwhile listening to or not?
Well, look who these people are. If they've got any endorsements on their websites by professional traders, like you have on the website, like bettersystemtrader.com has got on the website. That's perfect. It's exactly how it should be. That's the quality there.
Yeah, well, we've been very lucky to have some awesome traders on here. So yeah, that's awesome. Okay, well, let's move on to portfolios, because I know this is one of your specialties. You mentioned that it's quite a bit of work that you do now as mixing portfolios and portfolio composition. So why is it important to build a portfolio?
It is very important. It's important because it can enhance your risk-adjusted returns, and traders or investors are mostly risk averse, even though they say are not, in the beginning before they start. But in actual trading, in real life, they are risk averse. So it might provide a solution to stay invested even during the times of large drawdowns for several particular component strategies in the portfolio. So it can help to stay invested and be diversified. If you are using non-correlated strategies, and that's basically it. This is why it's important.
Yeah, I guess building a portfolio though can be a little bit challenging, because there's certain aspects that you need to kind of consider. So, what are some of the challenges you found in building portfolios?
Right, there are many challenges, as we have to be careful not to take, and mostly people even practitioners work with Markowitz portfolio model based on normal distribution properties, and they take it for granted. in real life, trading returns and volatilities do not follow normal distribution. So we have to be careful. We have to be careful and not to take normal distribution for granted. And also using single period average numbers can be misleading and create extreme weights for many constituents. So we need to apply methods like bootstrapping and try to come up with more realistic statistics and weights this way. So there are many challenges in portfolio construction. It's not that easy.
Yeah. Can you explain a little bit about the bootstrapping process? What is that?
Right. We try to mix together different time periods, not just one period from, let's say, 1990 to 2017, but we try to take different time periods and then calculate average for these different periods, not just for this one long period. And this way we can get better weights than just for the single period.
Right. So you're using that to find averages and then comparing that to other strategies. Is that how you do it in a portfolio?
Well, you just calculate weights for different periods in time. Calculate the average from these numbers, not just taking the whole period. Because when you take the period, let's say, last 30 years, and you trade bonds in your portfolio, of course, you will get a lot of weight in the bond segment because they were making 10% with almost no drawdown. So of course you've got to take different parts of this whole 30-year period and find different weights, and you will find out that the weight should be much smaller for the bonds than the single 30-year bull market that the bonds will provide you. So there were periods when they were much worse than the single period one.
Mm. Yeah, I guess the same thing happens with correlations as well, because they move over time, so they're not a fixed one fixed number over a long period of time.
Yeah,
so.
Exactly. That's very similar.
Yeah. So when you're creating these portfolios, you're looking at how all these types of values change over time, and how the adjustments of those produce different types of performance. Yeah.
Right. There were periods when, let's say, correlation or was much higher than when you look at the single period one, and this way, you can find out that probably the single period one is not correct. There might be some different parts that were much worse than the single one. So that's why you will get much realistic weight if you consider different parts, basically.
Yeah. Have you found that the length of the period that you're looking at, do you get better results with shorter periods or longer periods, or is there a sweet spot somewhere in there?
It will take, you will cut several smaller periods and try to find the weights there for each of them. And then you can calculate the average from these different weights, but not take the weight for the whole period. This way, because there were a lot of good periods, let's say, for bonds, and the weight will be much, much higher than otherwise when using the bootstrap methods.
Yeah. So as you mentioned, there's quite a few things to building a portfolio that we need to consider. It can get quite complex. What about traders who want to learn more about portfolio construction? Are there any books or resources that you can think of that can really kind of get them started down that path?
Resources to learn more about it, for example, can be found in Robert Carver books, systematic trading, and he also published a new one now. That's Building Portfolios, I think it's called. And I think this is the really correct approach that practitioners and traders should use.
Yeah.
not to rely on just basic portfolio construction softwares like portfolio software or something like that that take this normal distribution into account and single period numbers, average numbers.
Yeah. So a little bit more on this portfolio construction. Have you found that there's any particular combinations that you've seen that generally work pretty well together?
Well, I've seen that in a multi-market and different time frame combined together portfolios look to work well, in general. So if you are combining different markets into the portfolio or strategies trading different markets and using different time frames, like let's say you put in some intraday strategies combined with swing and trend strategies, and you've got, let's say we've got 15-minute time frame for intraday, and we've got 60 or daily bars for swing and daily to weekly bars to trend trading, and these strategies trade different markets, then I think you should be okay. You should be fine. The correlation should be very low, and they should perform also differently in different times. So generally, this kind of portfolios are performing really well.
Yeah, okay. Awesome. Okay, so number one tip for portfolio construction?
Yeah, combine historically no or low correlated strategies and trade different markets and time frames.
Yeah, so that's probably the fundamental basics of portfolios, right? Just follow those.
Right.
Yeah, okay. All right, cool. All right, let's move on now to broker selection, which is something that people like to talk about. Firstly, how do you go about picking a good broker? What do you need to look out for?
If you have to generally make sure that the broker is properly registered with regulatory and self-regulatory organization and should have longer history in the business and that personnel is experienced. And broker should offer stable trading infrastructure with short time order confirmation latencies. Ideally, the broker data center should be close to the exchanges, so you get the fastest possible fills, especially if you're trading high speed like intraday strategies, for example.
Yep. So there's been quite a few examples in history of dodgy brokers or brokers that have had some bad practices. So are there any warning signs that can kind of perhaps ring alarm bells to to people who perhaps have their money with these types of brokers?
Yeah, really bad practices can be obvious many times, like giving much different price than what it's on the tape, and so on. So these are obvious things, but otherwise it might be hard. So I would say I would look at the history of the broker on the regulators' websites, and I will ask also questions: are the personnel changes frequent at the firm? Is the clearing firm's capital as monitored by the regulator low? Or risk requirements margins very loose? For system trading brokers, I would say promoting hypothetical backtest results on the website without showing actual trading numbers, all costs included, might be warning sign. So look for transparency, look for capitalization of the broker, look for other different things that the regulator usually publishes on the website about this broker or brokers.
Yeah, I think you mentioned quite a few good points there for people to look at, but sometimes you just can't tell, right? If it's fraudulent behavior that's being covered up, then sometimes people who actually work at the brokers don't even know. So how can you that
might be the cases, yeah, especially with mostly lately it was related to some forex brokers, because they've got some leeway in quoting prices, which is not the case with regulated contracts on the exchanges like futures contracts or stock prices, stock trading on the exchanges. So yeah, when it's OTC market, there might be some practices. That's why there is more disclosures needed for OTC brokers too. So it can be harder for investors to really spot them quickly.
All right. So before we move on to a quick closing question, do you have a number one tip for choosing a broker?
Tip, look for experience in the industry, transparency, and first-class technology, and try to trade, exchange-listed, regulated products.
Yeah, cool. All right. Well, thanks, Martin. Let's just start wrapping up now with some quick closing questions.
Okay.
Okay. What's the biggest lesson that you've learned through trading?
Biggest lesson, I think, was be patient and try to diversify, if possible, capital-wise. Patience is the key here. Sometimes it might take time before start making money, even with a single system. Let's say it may take some time before there might be months that are not so good, and after that, if it's in line with historical back tests and non-tests, then suddenly it can start making quite nice profit. So be patient.
Excellent advice. What's the best trading advice you've ever received?
The best advice, I think it was do not become victim of behavioral factors, and try to advantage of these, because a lot of these inefficiencies or so-called market factors in the market is based on behavioral factors. That means overreaction on the downside, not enough reaction on the upside, and some other things. That's why there are trends, and these trends, research can show these trends usually work for many years, going by 100 years or so. So try to take advantage of these behavioral factors. That's the best advice, I think.
Yeah. Okay. All right. What's your favorite trading book?
Trading books, there are several of them. In the past, it was definitely Managed Trading by Jack Schwager.
Yep.
That was a great book, and Systematic Trading by Rob Carver. That was it's a really good book to read.
Yeah, that's a good one. Okay, excellent. So what's the best way for listeners to get in touch with you?
Yeah, they can email me, martinlembak@gmail.com. Anytime, so I'll be happy to provide any answers to questions they might have.
Oh, okay, awesome. All right, well, thanks so much for your time today, Martin. Is there anything else that you'd like to mention before we wrap up?
I think I should mention that, systematic trading and research presents many opportunities to test different market inefficiencies and market factors rigorously, and asset allocated to quantitative trading or systematic trading grow very fast now. So it is really worth it for traders to learn more. And I would suggest listen to podcasts, participate in different trading courses offered by practitioners in systematic trading field.
Yeah.
And it will definitely pay off later.
Yeah. Yeah, I should also mention as well that being in the position you're in of being able to see all the types of strategies that work and that don't, you've been able to amass a lot of trading insights that perhaps a lot of traders don't really get that kind of exposure. So I think there is definitely a lot to learn, and I should mention as well that you've put some of that insight into a product called System Traders Unleashed, which I think is really good. It's a really great thing. I wish when I was starting out, there was this type of information available. So I think that's it's really interesting. So I might have a link for that as well on the show notes page, and people who want to learn more about getting started with systematic trading, go and check that out. It's a great resource, not just because I'm in it, but because the material in there really is offers a lot of advice for people. I'll put a link for that on the show notes.
Yeah, sounds good. Yeah, definitely. They can learn a lot from that. There's 15 plus experience in this product. So the basics of systematic trading is really involved and they can learn a lot basically.
Yeah. It's all about the fundamentals, right? Which is some of the stuff that we've been talking about today, is getting the fundamentals down and then expanding from there, getting a solid base to work from. So it's very important. All right. Well, thanks a lot, Martin, for spending time with us today. It was great chatting to you about some of the fundamentals that we mentioned. So thanks again, and I wish you all the best.
All right. Thank you very much, Andrew. Thank you.
Cheers.
Bye-bye.
Okay, well, that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes, and all the free weekly trading tips. bettersystemtrader.com.